Live visuals coming in right there. You can see the cavalcade going towards the Parliament. We've got an hour from now. The Union budget is going to be presented. Those are the live visuals on your screens right now. Finance Minister meets President Ramnath Kovind. This is a big booster budget, big bang one that we're expecting. On your screens right now, Finance Minister meeting the President of India. Earlier, the Finance Minister, you've got the cabinet meet in just about a bit on the budget as well. 11 a.m. is when the Finance Minister budget speech is going to take place. Shiv, it's going to be a make or break budget. We've got our experts in the studio. They are going to be listing out their expectations. And Shiv, a big make or break moment for the Finance Minister today.
It's huge. I mean, the expectations are enormous on Nirmala. These are extraordinary circumstances, to say the absolute minimum, about the expectations from this budget. The consultations that have taken place ahead of this particular budget, it's difficult to imagine the complexity and the depth of the discussions that have taken place as far as presenting this budget is concerned. Nirmala Sitharaman's, in effect, this is her third budget, so the weight of an entire nation on her shoulders, as always. Rajiv Dubey, who's been leading a crack team in the run-up to our budget coverage, is with us and with our panel of guests this morning with just an hour to go. Now, 1 hour to go before the speech begins. Rajiv, just paint us a picture about the kinds of consultations that have been taking place ahead of this budget. You know, with industry, with corporates, with citizen groups, and with everything that we know so far. The Finance Minister is headed towards Parliament now. There's going to be a cabinet meeting, and then the budget presentation event will begin. What kind of consultations have happened during the pandemic towards the presentation of this budget?
So, Shiv, this has been right through the pandemic. You know, the Finance Minister, when the pandemic hit, when there was lockdown, right after that, as unlockdown was happening, she was going, to various cities. She was talking to various associations, and this has been a fairly proactive engagement as far as the Finance Minister is concerned. Her initiatives, if you see from the time that the pandemic hit us, have also been in bits and pieces, and that has been a reflection of the kind of consultations that have been taking place. Some of the things that have been done for the MSME sector. There was a time at one point where the liquidity that had been infused into the system was being taken away by large banks, and at that point in time, the next round of initiative that the Finance Minister took was to ensure that the NBFCs got a certain quota of that liquidity. So some of these initiatives have been from the consultations that have been taking place. Even before the budget, there was an economists roundtable, the regular roundtable with the associations, with the industry bodies. The discussions have been largely about how can they ensure that the pain of the pandemic, of the economy shrinking, of the fact that businesses had been shut or had been impacted to the extent that their revenue or top line had been so badly affected, how can that be reduced to whatever extent possible? And most of those initiatives have been about giving excess liquidity into the system so far.
Yeah.
Now, what we need to watch out for is what is it that will be done to bring about consumption back into the consumption back into the economy, demand back into the economy.
But there's so much focus on the supply side at the moment. What about the demand side? That's what you were talking about.
That's precisely what I'm saying. Yeah. So now what we need to watch out for in the announcements today is what are the announcements that will lead to a revival of the consumption cycle, of the demand cycle.
Correct.
Because that's the most critical thing right now. You don't have exports in your control, like I was saying, exports today.
Live visuals on air at the moment. We're getting you those live visuals of Nirmala Sitharaman right there. Going to take a moment to tell our viewers that these are live visuals that are coming in at the moment on your screens. Nirmala Sitharaman has reached the Parliament. In about an hour from now, that very crucial budget speech is going to start, and Rajiv Dubey continues to talk to us about the consumption side as well and how to boost the demand, because much is being spoken about on the supply side, but the demand side requires a fair bit of a revival at this point of time, given the coronavirus pandemic.
So, Chaiti, if there was, for instance, private investment happening, you could expect some of that revival if in terms of job creation, in terms of growth in the economy. If there were exports happening, you could expect some kind of... None of these is happening. The public expenditure, which the government, center and state, both had also been slowed down very substantially in the last fiscal. And this fiscal...
Home Minister Amit Shah has reached the parliament, getting you those live visuals right there. Nirmala Sitharaman also in the parliament. Home Minister Amit Shah enters the parliament at the moment. Those visuals just about half a minute ago you saw were of the Home Minister. And now, Shiv, a lot of mantris are coming in, but since they're all wearing masks, one can't really tell who's who.
Yeah, absolutely. I mean, this is the first budget since the pandemic began. Everything's obviously going to be very, very different. Pictures on your screen here of Nirmala Sitharaman with the budget tablet. Not the documents, but the tablet there, meeting with President Kovind, briefing him as well. We've got those images on our screen, and we can confirm that the Finance Minister has now reached, she has reached the Parliament, where there will be a cabinet meeting, over the next few minutes, and then at 11 a.m. is when the budget speech will begin, and it will continue for about 2 hours. So that's where things are. We're getting you all these live pictures, Chaiti.
That's right. Uday Kotak, the president of CII and CEO of Kotak Mahindra Bank, is now joining us live on this broadcast as well. Very good morning to you, Mr. Kotak. Thank you for joining us on this special budget broadcast here on India Today. My first question to you today is on the banking sector, and this is a question on most people's mind on how lending must be increased. Recapitalization of public sector banks is what we're talking about, and there is an urgent need, and encouraging them to lend without fear that every loan perhaps is going to be probed by the investigative agency somewhere needs to stop. And what is your expectation, one, on the recapitalization of PSUs, and B, on how the lending can be increased?
Thank you very much. As I look at the banking and the financial sector, I see 3 or 4 areas we need to watch in terms of the budget. The first, of course, is whether any of the banks are considered to be going from a government ownership point of view below 50%. There is some talk that IDBI Bank may be considered in that category. So that's one thing I would watch out for, where government ownership goes below 50%. Second is there is chatter about a possibility of a bank holding company, which means all the PSU banks holding will be under single holding company with a strong governance mechanism through the board of the bank holding company. And that enables the government to own 51% at the bank holding company, and also as long as they hold more than 50% at the level below, they have effective control but with lower economic ownership. So that's a second area which is being talked about. I'm not sure whether we're going to see outright privatization of public sector banks, but that would be a long-term desirable objective. Third is there is talk about a development financial institution being set up in the infrastructure space to start with, owned by the government. And fourth, there is talk about there is recommendations which we at CII have made with reference to multiple bad banks for clearing the NPL situation on the balance sheets of existing banks, which will enable and free up the capacity for banks to lend money. So these are the 3 or 4 areas we should be watching out for in the context of the financial sector.
Mr. Kotak, apart from the financial sector and the banking sector, what are the big expectations, from corporate India on this particular budget? Huge expectations. What are yours?
I think first of all, the time has come for significant mopping up of revenues through non-tax revenues. And in that context, I believe that this is a Margaret Thatcher moment in the area of privatization, should the government decide to go bold and firm in that. Second is areas on non-tax revenues like monetization of land, gold. So effectively raise revenues from non-tax sources so that you don't burden the system at this stage with additional taxation. And whatever growth happens on tax revenues happens due to economic growth. That is what we believe is the way forward. At the same time, from the point of view of fiscal stimulus, a natural stimulus has happened in 2021 with fiscal deficit expected to be around the 7% mark, maybe 6.5, 7, 7.2. We believe the stimulus should continue to a large extent into next year, and the fiscal deficit should be in the range of 5 to 5.5% from a longer term normalization to 3.5.
But would you like to cap the fiscal deficit target to 5 or 5.5 thereabout percent? Because what we are picking up from the street is that it could go as high as 7 to 8% of the GDP, given the fact that this year we're seeing a higher fiscal expansion in terms of expenditure, and that is something that's on the anvil, Mr. Kotak.
So you're right. For the year 2021, the fiscal deficit will be around 7%. But as we plan for the budget next year, our long-term objective has been 3.5%. But we do not recommend 3.5% one shot. It has to be gradual over 3 years. So from 7% move to 5 to 5.5 in the current year, and then have a glide path towards normalization.
And you were talking earlier about the privatization of the PSUs as well. Would you like to see any announcement come in on the privatization of the public sector banks and some sort of a roadmap that is chalked out for the way forward as well? Because that would perhaps ensure that the government's burden of recapitalization will also go down substantially.
See, one of the points which Prime Minister Modi mentioned is that the FM's mini budgets are culminating into this budget.
Yeah.
Therefore, if you look at the Finance Minister's announcement, she has already announced that government would like to exit from non-strategic sectors. So we are really awaiting the announcement. How are these non-strategic sectors going to be defined, and where the government has talked about total privatization. Therefore, that is something which I would think will be watched closely. And if you go back to history, we have seen that when the UK went through challenges, Margaret Thatcher, the then Prime Minister in the 80s, took a decisive call and transformed the future of the British economy by one of the most aggressive privatization programs ever. India will have to take this moment today and take the bite.
Rajiv, any questions for Mr. Kotak before the countdown begins? 50 minutes to go.
Mr. Kotak, where do you expect the job creation and demand creation coming from?
So first of all, Rajiv, very, very, very relevant questions. On job creation, my view is there is a need for encouraging enterprise to add new jobs and the government giving specific incentives for it. For example, in the Income Tax Act, there is a section called as Section 80JJAA, which gives incentives to businesses for net new jobs added. I would recommend this has to be increased. The current salary level, if I'm not mistaken, is up to 15,000.
Yes.
Time has come to increase this to maybe 50,000 rupees per annum. Therefore, any business creating new jobs for salaries up to 50,000 rupees per month, these jobs should be considered as potential for getting specific incentives from the government. Therefore, direct incentive for job creation is what I would recommend. And the second point with reference to demand, the way you create demand is by dropping fiscal deficit to normalization slowly and continue the stimulus in the budget. If our plan pre-COVID was a fiscal deficit of 3.5%, which for 2021, thanks to COVID, has gone to 7%, bring it down slowly to 3.5%, therefore over 3 years. So this year, around the 5.5% mark, and then gradually, therefore, continue this additional stimulus into the current year as well.
Right. Sanjeev Bajaj is also with us. I'm going to take this question across with Sanjeev Bajaj. Mr. Bajaj, all right, Mr. Bajaj is going to be joining us in just about a bit, but staying with Mr. Uday Kotak. Mr. Kotak, when it comes to the NBFC crisis in India, what is the kind of announcement you'd like to see for the non-banking financial sector?
No, I think one of the important things which the RBI has done is created an accommodative monetary policy post-COVID, which has given stability to the financial sector in the interim. However, the long-term answer is much better quality of credit and lending by financial sector, combined with better levels of governance, tighter supervision, and also a continuous monitoring of needs for capital. my strong recommendation to all players in the financial sector is please capitalize yourself better, raise equity capital, capital markets are buoyant, and increase your capital base so that you have the ability to withstand the shocks.
Would you like to see a, sorry.
No, go for it.
Would you like to see a bringing back of the FRDI bill as well?
I think the time has come for doing that so that there is a proper framework under which a resolution process happens in the banking sector in addition to the NBFC sector.
But there were always concerns about the controversial bail-in clause in that. So how would you like to see the finance minister tackle all of that, bring back the FRDI? But what about the big concern about the bail-in clause in it?
I think on the bail-in clause, we've got to first be clear how many banks do we want to keep in the public sector and how many banks over time we would like to have the government ownership drop below 50%. That could be a good starting point for us to take this forward and then combine it with the FRDI bill for maybe if there are less banks in the public sector, government can always take a view for those banks separately.
Mr. Kotak, Shankar Iyer has a question for you.
Yeah. Hi, Shankar.
You know, a couple of months back, there was a RBI paper and there was a discussion about allowing corporates, big corporates, to come into banks and the licensing process had to change. Do you expect anything to happen there? And the second question, you know, India's experience with development financial institutions, and you've been in this since the 80s. We've seen the IFCI episode, the IDBI episode, the IDFC episode. So is DFI the solution, or is there some other solution that we should be looking at?
Shankar, on the first point with reference to opening up of banking, I support opening up of banking, but I do believe that we have to be cautious on the areas of conflicts of interest and where is the greater motivation in terms of outcomes. So we need to ensure that there is a fair balance between these 2 points. On the point of development financial institutions, if you look at 2 institutions which have done reasonably well, they are NABARD and SIDBI. Therefore, you have one development financial institution in the area of rural and agriculture and another one in the area of MSME. These have done reasonably well in general. I believe that there is a need for infrastructure financing. And where is long-term infrastructure financing fixed rate going to come from? It has to come from either insurance monies, pension monies, and additionally, a platform which can create long-term financing on the balance sheets. So banks are not the right place because the deposit maturity of banks is barely 1 year, and you cannot expect banks to give fixed rate loans for 10 and 15 years. Therefore, the need for a financial institution is now. What we need to do is government has to find out ways of having an institution which gets the long-term funding sources, and there are ways of doing that, as has been done in the case of NABARD and SIDBI, and combine this with the most important point in the area of infrastructure, that governments, whether central or state, must honor contracts and pay on time.
So then can we expect some sort of alternate infrastructure funds registered under SEBI being introduced as well?
My view is you need a proper balance sheet development financial institution for infrastructure financing on the lines of NABARD and SIDBI. As far as alternate infrastructure funds is concerned, we already have NIIF with government as a 49% shareholder. An alternate infrastructure, an alternate investment platform actually could be used for bad banks and create multiple bad.
And here you're talking about a development financial institution as well that you'd like to see.
Yes.
And you'd like to see a success coming in on that front. So what is your expectation then?
So my view is a development financial institution specific for infrastructure with a proper framework. Shankar is absolutely right. In the past, we have struggled with this, including if you go back to history, IDFC was set up as one of those infrastructure finance institution, and it has now become primarily a consumer banking business over the last 7-8 years. We need a focused infrastructure financial institution with sources of money of long-term fixed rate funding, supported by, if necessary, even government guarantees, proper governance and managed more on the lines of NABARD and SIDBI than the development financial institutions of the past.
Would you also be able to give us a sense of a creative way of funding that institution with long-term money?
For example, right now, NABARD and SIDBI get disproportionate funding out of priority sector funding shortfalls with banks. And banks are obliged to put their shortfalls into NABARD and SIDBI bonds or loans. So there could be some similar structure which could be worked out where funding comes from these sources, or if necessary, even directly from the budget, just as the way NHAI is funded, FCI is, Food Corporation of India is funded, but create long-term fixed rate funding for infrastructure. But that does not take me away from the point that finally, if infrastructure financing has to work, the problem is, Shankar and the team at India Today, the problem is sovereigns, state or center or quasi-sovereigns must honor their contracts on time.
So that was Prime Minister Modi just entering Parliament right now. The Finance Minister is already inside. There's going to be a short cabinet meeting that takes place right now before the budget speech takes place in about 41 minutes from now. Yes, Sanjeev, you had a question for Uday Kotak.
Morning, Mr. Kotak. I wanted to ask you, in the context of the need for a DFI, why have we not been able to get the infrastructure and investment finance corporation going? What's wrong? We have a DFI, but it's not doing much. Why can't it be turned around?
FCL, as it's called, Infrastructure Investment Finance Company, has been primarily set up for giving supporting through guarantees which improve the ratings of the underlying development finance of the underlying infrastructure companies. IIFCL has not been structured with a view to providing long-term funding itself. Therefore, its role is more limited as it stands today.
Can the role be redefined to include direct DFI lending also?
I think either you make IIFCL into that company or set up a new company and fold IIFCL into that. That is something which they can think of.
NIIF? We've got a question coming in from Mihir.
Mr. Kotak, Mihir Sharma here. What about NIIF? I mean, that was also set up with some fanfare some time ago, and we were quite hopeful that would be able to channel some money into long-term investment.
Yeah, carry on.
Is that possible?
NIIF is a very good structure which has been set up. It's a structure basically whereby Government of India owns the asset management company to the extent of 49%, and there are other shareholders who own the balance. But essentially, NIIF is the fund structure where it gets money from global capital as well as domestic capital and invests through the fund structure. Now, NIIF has done a very good job in terms of collecting funds and increasing the corpus it has. It is still work in process with reference to being able to deploy that money. That is still something which they will do more actively, I assume, in the days to come. What we need is NIIF could also do equity funding and has ability to fund across the balance sheet. What we need is long-term sources of funding on the liability or the debt side for infrastructure companies, which needs to come in terms of debt financing. And today, there is a big challenge for 10 and 15-year fixed rate financing availability in the market.
Mr. Kotak, I'd, just to, stray away from the banking sector, we've discussed enough about that as well. On the revenue mobilization bit, I'd want to ask you, how can the government find ways to rake in more revenue, tax revenue? We've discussed when it comes to non-tax. What is your sense?
My view is go out. There is never a good time or a bad time for taking a view on privatization. The time is now. As I mentioned earlier, this is the time when we must say government gets out of most businesses and let it move in a significant manner with a focus, passion, and an execution surgicality. One of the challenges in our privatization or disinvestment process is whenever there are challenges which come in our ability to execute, we get into administrative and bureaucratic issues. This needs the topmost priority, and go out there and let's once and for all, other than in very select areas.
So with all due respect, while we're expecting a lot of cheer on that front as well, as far as the non-tax revenue is concerned, we've seen government missing targets in the past as well, as far as the disinvestment targets are concerned. And I do understand 2020 was a tough year. There was no way they could have met that target. But even the years before that, you've seen the divestment targets not being achieved.
You know, one of the things that we have learned in the corporate sector and in business is execution is as important, or probably even more important than strategy, and therefore execution is the key.
Okay, execution is the key. Uday Kota, thank you very much for your time. We've just got about 40 minutes to go before the budget speech begins by Finance Minister Nirmala Sitharaman. As you can see, pictures of Prime Minister Modi entering Parliament right now, just a short while after the Finance Minister herself. You can see other ministers with the Prime Minister as he makes his way into Parliament as we speak. These are pictures from just a few moments ago. As we speak, that cabinet meeting inside Parliament House has already begun. These are pictures from a short while earlier. Nirmala Sitharaman armed with that Made in India tablet, briefing the President as well before making her way to Parliament. This was where that discussion was taking place when President Kovind was being briefed, as is the tradition. Nirmala Sitharaman is now part of that cabinet meeting that's taking place in Parliament at this time. So, Rajiv, I want to bring you in on that. This cabinet meeting that takes place in Parliament right before the presentation of the budget speech. You know, I want to give my viewers the simplest information we can possibly today. What happens at that cabinet meeting? Because I imagine there have been a lot of meetings already so far as the budget is concerned, consultations, you know, between government departments, the PM or the Finance Ministry. What is this particular meeting about?
Very similar to the briefing to the President, you know, and it's a very short discussion, major points discussed, essentially the thrust of the budget, and what you know, what the Finance Minister is going to be putting out before the Parliament and both houses. Basically, a briefing not very different from, as I said, before the President. Largely major points about you know, the budget documents would have already been shared with them. They are essentially told what is it that we would be focusing on, and you know, largely not very different, as I said, from the discussion with the President. It's a very brief discussion that happens before the